Hello everyone. All right, so I'm going to be going over some markets as well as a lesson. All right, so let's take a look at the ES, and then I'll take a look at ES crude gold, and I think that's about it. So ES had a climax here, right here in this area, pulled back, tested the climax, rejected, went down. You might have some selling as it comes back a little bit higher. Above this area, 5276, above that area, above the pullback level. So we'll see if it rejects there. But as you know, and why I'm saying that is you have a very strong indication up here that is untested. All right, so there's chances that it's going to go there and reject. So what am I talking about for this? We're going to go to the hourly Renko. Hourly, but the Renko corresponding to the hourly. There it is, right there. Look at the volume. See that? That's 3.2 times average volume. And look at the damage it did. See that? Look at the damage it did. There's the pressure cooker or the sell bar, smart money selling, right? And look at the damage. Here it was breaking down below these lows. So you have the dot, the blue dot is just high volume. So then you have to interpret what is it? Is it breakout? Is it absorbing? Is it change of behavior, climax, effort, etc.? So here is just selling, and that selling initiated this. This bar, this brick with heavy volume with a big red hasn't been tested yet. So what am I looking for? I'm looking for it to get tested and see the reaction off that area. So very, very, oh shit. What level is this? It's right under 5,300. So I would say about, as price gets closer to 5,300, right? As I get closer to it, that's where I'm looking for a reaction. And I don't know if I'm going to get it or not. If it depends if it gaps up or some shit like that. But if it tests normally, I would be expecting pressure here. Anyway, whatever. So, all right, now just taking a look at a daily. One of the important things is I don't see any reaccumulation. So this is also good. Why? Because, when the markets pull back, you're looking for reaccumulation, right? Because that's what a pullback does. It provides discounted prices, so smart money can reaccumulate. That's all. Pullbacks become rallies. Why? Because smart money accumulated the pullback, and then it goes up. That's what's really going on. I'll give you an example right here. As the market moves down, right? You see this? It goes down, down, down. Here. You see how the volume starts increasing? Here 1.4 and here 1.5. This is the reaccumulation. 1.4, 1.5 right here. This, not that, but that. That 9 right there, that 9 is your first indication. That 9 right there is 9 times 10,000 contracts. So 90,000 contracts at the 5180 level. And then they picked up the rest here. Another 11 times 10,000 over here. So they picked up more here. So on the daily, on the pullback, right? What did they do? They reaccumulate the pullback. So this is what you need to develop the skills, whatever tools you have to see this. The rally occurs, then the pullback occurs. Now in the fucking candle or bar chart, you're not going to be able to see this. So I had to devise a way to see this. A chart way to see this. And basically Wyckoff had the solution already. So I just implemented, his stuff. but with my twist to make it easy to read. 1.4, 1.5, what is that telling you? Volume is increasing. Why is it increasing on the pullback? Because they're buying it. And then confirms with the breakout. And this is the heavy volume area of accumulation here. So that's why it tested and went up Thursday afternoon to Friday mid-afternoon. All right, and then it went into that selling area, and you know, you had a possible change in behavior bar, but that set up the really nice trade. So now I'm seeing this pullback, and I don't see shit. Here it's 0.8. Here it had more volume, so I don't see the accumulation. So I mean, if they're not reaccumulating, guess what? There's a problem. If they're not reaccumulating, it means lower prices, in my opinion. Unless I see this change. Yeah, I don't know. What I see here is this is the heavy volume selling area, and price is going to go there. There was some buying towards the end of the day here. I could see it here. But this is where the major, you know, big red is. So when it goes to big red, it's gonna have a very high probability of reacting, because these guys, look at the damage they did from here. Look at this damage. This is not trivial, not trivial at all. Someone sold, and they sold hard. So we'll see as it goes there if they're still there and they push the market down. From the buyer's side, here's the climax confirmed by the green brick. The breakout right here to go higher. Some effort right here, not a lot, but some. And all of that volume is nothing compared to this up there of selling. All right, so yeah, so this is the area right here, guys. That 3.2 is very telling. That's the juice that made, that did this. So we want to see what happens there, the reaction there, and it's untested. From what I can tell, it's untested. All right, so that's really important. We want to see what happens there. The other area was already tested. It was right here. You see that 3.5? Look at the volume here. You see that? That 3.5, boom, and then cracked right here with the breakout volume. Right? So this is like the climax. This is a retest of the climax. This is the climax. This is a retest, breakdown, test of the breakdown, retest of the climactic area. Selling pressure came in, breakout below this area, breakdown below this area, climactic, breakout above this high, attempting to go to this seller right here. All right, so that's what's going on. Anyway, so what do you take away from this? Just wait until it gets to this level. I don't know what the hell is low. The low here is 5288. So it's obviously above that low, 5288. So it's above that low, 5288, towards that 5300 area. 5288 to 5300. I'm looking for a reaction. All right. Why? Because their strong hands are there. This is what strong hands are. And they don't lose money. They protect their position. So we just have to see if they're still there, or are they done with this move and reaccumulating. So that's what we're waiting for. All right, I'm done with this. Let's move on to the next market. Okay, so already crude is going up, right? So what are we looking for? It's in an uptrend, so we trade longs. And where do we trade? We trade support resistance. So what direction? Long. Why? Trend is up. Where to trade? Support resistance. So you have the direction and you have the location. So here is where smart money is, right there. You see that big red, big green? You see that big green? That's 3.5 times, 3.1 times the, 3.15 times the average volume. So what do you know? If you have volume plus price movement is demand, volume plus up price movement is demand, we wait for the test of this area. So like under that 82 level, like right around here, we'll be looking for a reaction in crude, right? It's going to take some time to pull back, but these are pretty strong moves. If you want a short term, it's right here. That is the 85-ish, I think. So like a little reaction there should be good. Yeah, it's there. They're big red. See that? They bought the pullback, price moved up, so they should react here on a pullback. But anyway, I'm not looking for small moves. If I want to, I'll do it, but this is the big move. So pull back to this area about 81.05, 81.82 in this area. Mega buyers, There's over 1 million contracts traded in crude within this one brick. 1 million contracts within this one brick in crude. This is not a small position, folks. Last time they did that, it was here, where they did 1,200,000 plus on 3.7 times the average volume. It went up, offered the pullback. This is effort, by the way. It went up, indicating whether this is supply or demand. This is demand because they're buying the pullback. Price goes up after the high volume, indicating demand, meaning someone's selling, the other guy's buying everything. Goes up, retest that area, boom, rallies. Now we're having that retest, right? We're gonna have that test here, and looking for a pullback to this area and then reaction higher. See a big green? All buying right here. And we'll take a look at gold. Gold is a little crazy right now. Regardless if you have selling, someone else is buying and taking price higher. So this is extremely strong. So you don't want to mess with markets like this. On the short side, it's better to be on the long side because short signals are not working. All right, these guys, look at this. You know how many days? Green, 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 green. 1, 2, 3, 4, 5, 6, 7, 8 days in a row. One red day followed by another green day. So here the buyers, they were active here. You see here, they're 3 times the average volume, right? 3 times the average volume, and price goes up. So these guys are the ones that caused the retest and it flew. This is it. These buyers, very strong. All right, then it went and it started climax. I thought this was climaxing, and it reversed, but someone bought it. Someone said, okay, you want to sell? I'll buy your stuff and take it higher. So that means either this is going to hold a support, or if it doesn't, look at lower levels. So either here or here. This was the strongest area right here. This is the strongest, then after that, it's in this area here. So we'll look for a pullback and see how deep it goes. All right, so that's all I have for today. Now we'll go into the lesson. All right, so as you can see, this is a type of price volume analysis, real supply demand analysis, using volume and all that, right? So I wanted to explain something. A lot of times we are taught to think in probabilities, right? So this is what you learn. Oh, you got to think in probabilities, right? And accept randomness. Accept a degree of randomness in a single trade, but more certainty over a series of trades, right? So this, from a psychological perspective, you're taught to think in randomness and accept randomness on a single trade, but certainty over a series of trades. Okay, I dig it. Next, when you're trading, most traders have a checklist, and the checklist if you know what you're doing, you have a checklist, right? Yeah, it's a set of conditions. Mean condition 1, condition 2, condition 3. Right? And it's like, something like a key reversal, maybe a level, or, indicator, signal, something along these lines. Okay. So, I'll tell you this. There's some other approach, all right, and that approach is literally the checklist is like, are you trading with a smart money? That's really it. Are you trading with a smart money? And doing your price volume analysis, to determine accumulation and distribution areas, which are basically the CM or the smart money areas. All right. So the first part, okay, I get it. Thinking probabilities, accept randomness. You need to do this, no question. I'm not gonna argue with this. All right. The second thing, though, is this is more tactical. This is more tactical. All right. This is more tactical. There's no strategy behind this. It's just set of conditions. And this is tactical. But this here is strategic. All right. This is more strategic, and this is what Wyckoff, the whole point of his course was be able to identify smart money through price volume analysis and establish positions with them. That's really what he was trying to do. In all his chart studies, when he went into climaxes and showed that, all of that. So this is what I'm trying to get at, is this is the cart that goes before the horse. Meaning you need to focus on this first and then that. Okay? Again, you need to focus on this first because it's a strategic point of view, and then focus on the tactical, the conditions that indicate this. All right? Meaning, how am I detecting? Okay, I'm going to give an example now. On gold, what is the strategic? The strategic is identifying smart money trading via price volume analysis. So I'm looking at this chart up here. Where did smart money establish a position? They will buy the pullbacks. Market is pulling back. Market is pulling back. Red bar, pullback, consolidation. Bingo. Right there. 2.7 times the average volume in this little shit right here. 2.7 times. Does that make any logical sense that you have all this volume and prices not going down? Isn't this effort reward? Obviously it's effort reward. And then it gets confirmed by price going up that this is the demand accumulation. This is the accumulation, this is demand, this is bag holding, this is effort, it's all those things. So from a strategic point of view, we are not obsessed with schematics. We are not obsessed with drawing trend lines all over the place. We are not obsessed with marking up the chart in phase A, B, C, or D. We are not obsessed in looking at indicator, whether it's a divergence, whether it's not a divergence. We're not obsessed with a base. We're not obsessed with any of these things because these are conditions and behaviors. The error that's made is focusing on a set of conditions and thinking that's an edge. Let me repeat that. The error is that you're focusing, or like in general, focusing on a set of conditions and claiming that it's an edge. Any set of conditions. So for example, you see the green cross the red. Aha, that's an edge with a big bar. That's an edge, right? That's the belief. Condition 1, green crosses red. Condition 2, green bar above the green moving average. It's like that. That's condition 1 and condition 2. And then saying, oh, that's a signal and trying to trade that. This, in my opinion, is the error. By saying that, you have, for example, even a spring. By just saying, okay, this goes below this low and then reverses up by itself, meaning just as a condition, is an error because it could just be a lower low and not a spring. Or, so moving average crossover is a condition. Any behavior by itself is a condition. That condition is a condition that is tactical without looking at the strategic point of view that Wyckoff is trying to get across, which is being able to identify smart money. When he wrote his study on how to identify a campaign and put a study together, he was trying to tell you how to identify an accumulation going into markup and being able to track that smart money, what they're doing. So the idea here is similar. Instead of looking at just a behavior, you have a strategic point of view before the tactical conditions. The strategic point of view is really asking one question: where did smart money establish the position? Can you use your judgment to identify smart money? Wyckoff did this. He did a lot, but the key quote unquote behavior that he was looking at was climaxes. He was really big on climaxes, really big, because he knew that that's where you have overbought, oversold conditions with heavy volume and panics, and guess who's taking the other side? Smart money is, right? So one of the first things you look at, is climax, then the secondary test. So it starts with the climax. Why is that? Because that's like saying smart money is buying. Smart money is in. Smart money is establishing position. So similarly, the strategic point of view is identifying where smart money is first, and using the tactical to give you a set of conditions that help you identify that the guy is right here. So for this, you'll need a set of tools. You'll need whatever approach you use, right? You'll need something to help you identify smart money is buying. You'll need a set of tools. You'll need a set of charts. You'll need your approaches. You'll need your indicators. But those indicators are not signal indicators. Those indicators are helping you make a strategic judgment about smart money and whether they're accumulating, whether they're buying. Why? Because you want to buy and sell with them. Why? Because they always win. Look here. They were up here, and they set up the pullback. Here they bought, boom, went up. Whoever bought the retest made a lot of money. Boom, boom, right? So these are large interests. So my point again is, in your trading plan, in your trading strategy, the Wyckoff style is identifying where is smart money, accumulation, distribution, and then you can use whatever buying, selling tests you want, and then the idea is to trade with them. That's all, folks. All right, take care, bye.